So like I was saying, basically, it was our three type of market structure. This is a bullish market structure. Why? Because market keeps breaking the highs. These are the obvious highs that market is breaking.
Yeah.
Okay. And normally price moves in 3 or 4 phases. So your impulse, impulsive phase.
Okay.
Your exhaustion or retracement. Some will call it retracement phase. Your continuation.
Yeah.
Now lastly, your reversal. These 4 must be taken into consideration. Anytime anytime you open your chart, you should be able to know what is happening, because one of these 4 will be happening when you open your chart.
Yeah.
One of these 4 will be happening. So where is the impulsive phase? So this becomes our impulsive phase. An impulsive move is any move that breaks a major high or a major low.
Okay.
So in an uptrend, we can say any move that breaks a major high is the impulsive phase. So your structure we see here, as we look at this structure, this is a low and this is a high. So
Yeah.
this was our impulsive phase. This phase that broke this high was our impulse. And we said that after every impulse, there must be a retracement. So we saw the retracement phase here, a push down, a push up, a push down, and a push up, as if it was going to break the high, but it didn't.
Yeah. Yeah.
It came back and broke the low. So if you don't know market structure, you might think that, oh, once the low is broken, I'm waiting for a return.
Yeah.
The market will just sweep you, bam, and then break the structure. So you didn't know we were in a bullish market.
Yeah.
You didn't know that this was just a retracement phase.
Yeah.
So this becomes our impulsive phase. After the impulse, we also had a retracement, and then we had that break. So after this break, what are we waiting for? A retracement, and then a continuation. Or price can do this, break this low, and then we know that we are no longer bearish. I mean bullish.
Sure.
Market has changed.
We are no more. Yeah.
Changes direction. So at any point in time, if you are trading as a beginner, you should be able to know. Come on, let me take this away and clean this. Good. So at any point in time, you should be able to know that we are either in a push phase or a retracement phase, and you know what to do. So normally you don't trade the retracements. As a beginner, don't focus on trading the retracement. Sometimes the retracement can take long. If you know, say, baby,
Yeah.
if you know that where price can retrace to know is a bit far, then you can likely join the retracement. But know that you are trading the retracement phase. And at any point in time, market can resume its original position. Up to this point, and I believe you understand, right?
Yes, I'm okay.
So we'll go to the live chart so that we will see some of these examples. So in a bullish market, we are interested in buys.
Yeah.
So you'll be looking for buy setups. And for our buy setup, we say that our strategy is break and retest. So once the high was taken by this move,
we wait for the retest.
We wait for price to come back to where it broke out from. These highs that was broken. We wait for price to come. Okay. Sometimes you can test it directly and return. Sometimes you can do a deep retracement.
Yeah.
So after the retracement phase, normally the retracement will be, because we are bullish, the retracement will be a bearish structure.
Yeah. Yeah.
So all that you are waiting for, once price reaches the area you are waiting for, waiting for price to break the immediate high that was created before the area, then you know the market has shifted structure. Something like this. So once it breaks the high like that, you know market has broken this high. So what are we waiting? Retracement into the area broke out of. This was resistance. Once it come back, we want it to be support so that we can buy the price up, put our stop loss within this range, and then target some of the highs that are on the left. So this has been the strategy. And I know that it's not difficult, just that it requires more effort and screen time. You have to always be
Sure.
practicing what you are.
A restricted way, my own you wait.
Exactly. Somebody said that not trading is also trading, or waiting is also trading. It's part of the trading. It's not only hitting the sell button. If you have not hit any button at all, you are also trading. You are just waiting for the right time to execute. Because I believe that the people that are making money, okay?
Yeah.
The people that are making money, their timing of execution is accurate.
Yeah.
Sometimes you may enter prematurely and market will just sweep you, and then after it will go in your direction. And then late entries are not also good because it will make your stop loss very wide.
Sure.
Maybe you came here, price broke this high, a retest, you were not there, and you came and price has moved to this direction. It's yet to break this high.
Yeah.
Then immediately you say, oh, let me take my buy. And then you start your TP somewhere here. Your stop loss should come somewhere here, which is very wide.
Very wide.
But if you were on the screen and you took it here and your loss is here, it's lower. So when you miss a trade, let it go.
Let it go.
Because it will break this one, and then definitely, if it will continue in that phase, it will retrace and give you a better risk to reward. Then you enter, and then you maximize your trade profit.
Your returns, yeah.
Exactly. So we should be more interested in protecting our capital than any other thing. This afternoon, I was thinking about something, and I was like, if you blow an account and it takes you like 1 month, 2 months before you can get money to fund it again, then you should be very careful with how you take trades, because you know that when you blow the account, it will take you a very long time before you get money again.
Yeah.
That is what makes people give up on this journey, because it will take him 2-3 months to make $500 cedis to maybe buy a $50 account or $100 account. And within seconds, you will go. Then it will take him months again. So when the person look at it, be like, no, I'm not interested in this thing again, and he will go. So the goal is not to be depositing. The goal is to be redrawing.
Withdrawing.
Withdrawal should be your target. Withdrawal, at least by the end of every week, you should be making some withdrawal. Yeah. So let's go to a live.
Yeah.
And then let's see what we can do. So basically, another thing I want us to look at is top-down analysis. Very important. I think the last time when you came, we looked at it, top-down analysis.
Yeah.
The reason why we do top-down analysis is, number one, we want to know which direction to trade in. Which direction market is trading in. So if we are in the impulsive phase, then we know there is going to be a retracement into some area that we are waiting to take action.
Yeah.
So that is the reason for top-down analysis. And the second reason is we want to reduce our risk. So once we start from a higher time frame and we go down to a lower time frame, we are reducing our risk. Exactly.
Okay.
You can't take trade on 4 hours if your account is not strong.
Sure.
Where would you
Sure.
So that is the reason for our analysis. So it depends on which type of trader you are. Some people begin their day from the 1 hour and they are okay, and they go down to 15 minutes, 5 minutes, 1 minute to take their entry. Others begin from 4 hours, they go down to 1 hour and then minimum 15 minutes to take their entry. It's up to them. So you have to decide which one to do. Personally, I begin from the 24-hour down sometimes, but most of the time I'm on the 4 hour.
Okay.
Yes,
Okay.
I'm on the 4 hour. Except when I see price has reached a 4 hour high or low, then I go to a time frame higher than the 4 hour, like the 24 hour, to see exactly what is happening on the 24 hour. Okay, so this is VIX 10 1S, and we are on the daily time frame. And first of all, what can we see?
It's uptrend.
Exactly.
It's making higher lows, and then
We are in an uptrend because market is moving in this fashion. So once we are in an uptrend, we start marking our structure on the higher time frame. Structural markings. Because we are in a bullish market, we are interested in buy setups. So let's forget about this side of the market. Oh, okay, I'm still on the 1 hour. Let me go to 24 hour. Sorry about that. Okay, so 24 hour is still clear. We have been bullish.
still up.
We are still going up. So this is a bullish market. So in a bullish market, we are interested in buy setups. You see that fashion?
Yeah.
And then price broke this low and then came down. So this was the last low price took out before it came here. And then we saw that price has resumed its bullish nature again. So we had a push phase, we had a retracement phase, and then we got a push phase that broke this high.
Okay. Yeah.
And then after we had price retrace a bit, and then we see another push phase that broke this high. And let me zoom in properly so that we see. After price took out this high, see how I've marked the area with the rectangular tool. From the last high, from the body to the wick of that candle. And if there's a candle that is ahead of it, that also high, you just mark the high of that one. So this is the zone. And this was the impulsive phase. See this move here, a push, which failed to break the high. So there was a little sell. So those who sold, they got some small profits.
Sure.
Then right after, market broke. So this was an impulsive phase.
Yeah.
So after impulsive phase, I said we wait for what? Retracement into the area price broke out of. So if we can check correctly, this was the candle. Come on. If you can check closely, this candle was what came for the retest to the zone.
Yeah.
As soon as it touched the zone, it was bearish. It had a very long wick rejection and closed as a bullish pin bar, as a sign that the bulls have started entering the market.
Sure.
So if you were to take a trade, let's say we open our chart and then on that day, this was the candle we saw that was forming. So it opened here, traded up a bit, and then started trading down. As soon as it touches the area, you won't wait for it to close. As soon as it touches the area, yes, if you like, you can wait for a close, or as soon as it touches the area, you go down to a lower time frame. So let's go to the 4-hour and see what happens. So on the 4-hour, this was the area that price came into the zone.
Okay.
You see what it did there?
Yeah.
It just touched the zone. So like this, you will not take your trade from here. You go to 1 hour, you are just going down.
Yeah.
You see which structure formed that low here. And as you come here, you see that it was not too clear even on the 1 hour, but what you can see that we have reversal signals. One of it is double bottoms and double tops.
Sure.
You see this first leg, this was the first time price touched it on the 1 hour.
Yeah.
Price tried to move away, created this high, and then it came back the second time to touch the zone, and then it moved away strongly.
Sure.
What I'm telling you, market has shifted structure from this bearish move. Now it has created a bullish structure. This is where it is important to catch the trend. When you catch it here, you are able to make good profits at the early stage.
Sure. Sure. Sure.
So
Sure.
this was a double bottom. And if you were to trade this, oh, come on. Sorry. If we were to trade this, just want to delete everything. So our attention is here. If you were to trade this, we could have also gone to, we could stay on the 1 hour and then say that this was some kind of a W. And once the neckline was broken, we wait for price to come back to the neckline. Retest. And this was the neckline. And mark it much more accurately. You see, this candle was the candle with the longest wick. This So
Sure.
you mark from there. You use your rectangular tool, you mark from there and then to the body of that wick, candle, then you stretch it out. You stretch it out. And you were waiting for price to come and hit that zone for you to, yes, for you to see a candlestick confirmation and then you take a buy. And here you could see that price never really hit the zone.
Yeah.
So if you are inexperienced, you could miss this, but some of us would have taken it.
Sure.
Aha. Some of us could have taken it. So you hit it right here. Your stop loss is here. And then you look to the left and target the high. You can target this. You can even target this high as your first take profit. So TP1 could have been hit immediately. And then this becomes your TP2, extreme end. This could have been your trade setup. And look at how many times price came to that zone and never broke the zone. So later we will learn something. The reason why I said some of us would have taken it is simple. I know about ICT and I know fair value gaps, and this is a fair value gap.
Yeah.
Price came to the fair value gap severally and refused to close below it. So I could have taken my entry right here, put my stop loss a little bit below it, and then go for my target. And I could have hit my take profits. If I aim for this high, 1:5. So if I'm risking $10, it means I'll make $50 if I don't lose. And I would have made my $50, boom. Very nice setup. And look at it. After it went away, this was an impulsive phase, a push phase. Why? Because it broke this structure, these highs. And after it broke it, it came for a retest, but it was a bit deep and it couldn't push away. The sell was strong. So price came back to the same zone again, and then it started taking off again. So actually, if I was looking for another trade, this was where I could have found it. Here I had price breaking the structure. But this is something you don't know. Don't worry about it. So this was a break. And then I have my fair value gap. I would have entered here. My stop loss a little bit below it. And then I look to the left and target TP2. And bam. I found my 2 trays. You see, when we are doing back testing, it's nice because price has already played out and you know your strategy. And so it's easy to take some of these decisions. Sometimes when you are live, that's when it becomes a bit more challenging. So look at how many times price also came back to the same fair value gap and it couldn't violate it. And we are pushing away. So if we are waiting to take another buy trade, then this was where price broke this structure. And look at it. It left a fair value gap behind. So we can wait here. If price will retrace deep, then we can take our buy here, put our stop loss here. Why? Because our higher time frame bias is bullish. So we are only interested in buy setups, and this is our target. So this becomes our TP3. Trading is supposed to be this easy, so can you hear me? Yes, sir. Can you hear me? Wonderful. Hello? All right. So this has been it. This has been it. Okay, so this has been it. Sonomos Barekesiatas. Wonderful. Wonderful. So this has been it. This has been it. Welcome. You are back.
Yeah.
Yes, sir.
Network.
Okay. So this
Maybe say
yeah.
you would have taken the trade because you know fair value gap and then
Yeah. So maybe next time you look at that is an ICT concept and it's very challenging. So I don't want to worry you for now. So you
But statement now make here from that end now only because
What I said was
so.
many traders, break and raters would have missed the first entry because price never came back to the zone they were expecting.
Sure.
This zone, they were waiting to take the buy from here, but price never came there. Although he visited the area several times, it never touched that zone.
Yeah.
They could have missed a lot of opportunities because they only know support and resistance trading. They don't know other concepts.
Yeah.
But for me, that knows ICT and knows fair value gaps, I would have taken my entry on the fair value gap here, and I would have won the entry. And look at it here. It came again and then gave a fair value gap here.
Okay.
Gave a fair value gap. It's a 3 candlestick pattern. And you see that the wick of the first candle and the third candle, they are not locking up well. You see that
Yeah.
there is a space between them. So that is the fair value gap.
Yeah.
But don't worry about it.
Oh.
I would have entered here, put my stop loss a little bit below the area, gone for the previous high for my TP2, and I would have won it. I look at it, price came back again to the fair value gap and respected it again here. Once it respected it, it shifted structure by breaking this immediate high with the candlestick body. And it left a fair value gap behind. So if I'm looking for trade setups, I'm waiting for price to get here and I'll take my buy again because I'm bullish. So this is a nice buy setup. So I'll take it from the beginning of the fair value gap and then my stop loss below this area, which looks a bit wider, but that's fine. And then I'll target this high. And I may buy Alaji Guru Sakai. So yes, right now price is reacting from here. There is a supply zone here. That's why I didn't go beyond there. So maybe that is the supply that will bring us into this fair value gap and the boost will take over again. Then we hit this area. Oh. Because when you go to our monthly time frame, weekly time frame, let me share on that particular asset. Which asset is it? This 10 is.
Yeah. Let me check.
The weekly is bullish. Strongly bullish.
Okay. Yeah.
The weekly is bullish, strongly bullish. So we are in the push phase. This was the immediate high that price broke. So if anything at all, we might expect the weekly to come for a weekly retest.
Yeah.
And then we take our buy entries. If this current week wants to do the retest for us, that is fair enough. But if it wants to continue bullish, it will still break the previous candle's high with the body. This was last week.
Yeah.
So for now, we don't know because the week is still young. Today is just Monday and price is still running. But when you go to the daily give us a clue as to what is happening on the weekly. We can see that this was the daily high. That price is failing to break with the candlestick body. Though we have wicks that are wicking the area, the body has not closed. So if we will be bullish, I would wish that today's candle will close above it like this.
Okay.
Bullish. But if the wicks keeps on going there, but it doesn't close above the area, then I'll consider some sell entries in the upcoming days. So that has been, this is how you analyze the market. So just do more practice. Just do more practice and I think maybe we'll be doing more of the Zooms like you proposed. we'll be doing more of these zones. So price has run into a supply zone, and it's really, this candle is very violent. Is it visible?
Hello, Bishop.
Yes, sir.
Sorry, not call me.
Okay, so the current candle is very violent.
Yeah.
Very
Yeah.
violent.
So, you know, analysis now on the weekly time frame. No?
Yeah.
And the question was since there is a Juma weekends, no.
Yeah.
The weekly started the bang, or only weekly started the bang, and at the same Sunday now.
I think it's Saturday rather.
Uh,
It used to be Sunday, but if Omar revise the time, no kakra. So
okay.
it's come to Saturday.
Mm,
So if this candle succeeds in breaking this low with the body, then I know we are no longer bullish. Internal structure is no longer bullish.
okay.
When I say internal structure, this was a high, okay?
Yeah.
Which gave us this low, and price started moving up. So we are still between this and this, the range. We have not cleared out of the range.
Okay.
So whatever is happening here is internal structure, and currently internal structure is bullish, but we are seeing some bearish vibe right now.
Okay.
So if this candle close and the next candle is able to break this low, then I know we are no longer bullish on the internal structure.
The internal structure.
So this will be a break in market structure or market structure shift or change of character.
Or change of character. Okay.
Then I'll mark this last up candle before the bearish move as my order block. Then I'll wait for price to come back. I'll take myself, put my stop loss right above it. And then I'll target the fair value gap here, because below here there is another block and there is a fair value gap. And the higher time frame is bullish. So this one seems to be like a retracement sort of. This is a complex structure, so it's a lot of experience too. So right now, no, I was in the buy, but I just left. Once I saw this candle down like that, I left. I was targeting this high, but once we hit this supply zone, we are getting
supply this. Okay.
The weak rejections. I had to leave and see what price will do. So if I want to take my buy again, then I'm waiting for price here.
You're waiting for price to hit there. Yeah.
And ideally, normally we...
That is a fair value gap.
Yes, that's a fair value gap. That's a fair value gap.
Oh, okay. Oh.
That's a fair value gap. And normally we have premium and discount. Premium and discounts, we use some to be like this. So you mark, I'll teach you all these things, so don't worry.
Okay.
You mark from this current low to the swing high, current high. So when price goes above this line, we are in premium and we are looking for sales. So in premium, you sell, but in discount, I mean, this area is a discount area. The midpoint is the equilibrium, the middle point.
Okay.
So when price is below the middle points, you look for opportunities to buy.
Okay.
And when price is at the top, you look for opportunity to sell. So currently, we are within the top and price is giving us some bearish move. So once the bearish move is confirmed, then I'll take myself from premium to discount. And those who want to buy are waiting here. So they are waiting for the sellers to bring the price to them, then they take over. That is what happens in the market. Because you can't buy what nobody is selling. If nobody is selling, there won't be a buyer. So somebody must sell you at a price, and this is the price you are willing to buy. So you are waiting here because at this price, it's cheaper.
Sure.
When you buy from here, look at if price decides to go down, you'll be in